Welcome back to Talk the Walk with me, Sarah Wong. I'm with Stephen Lynch, Managing Director at British Chamber of Commerce, China. He joins us from Beijing. Thank you very much, Stephen, for coming on the show. We're just talking about the British Chamber of Commerce in China's latest report on the, the negative impact of China's prolonged dynamic zero-COVID policy. And now I want to look at the impact in foreign investment. The reports laid out that the unpredictable disruption was blamed for delaying planned investment, and projected continuing reduction of revenue and profits are also curtails investment appetite in China among foreign businesses. But I wonder, what we've seen is foreign direct investment in China has increased in the first quarter of this year, notably in the high-tech industry and high-tech services sectors. Now, in your report, you've laid out that only 16% of businesses have made a decision to reduce investment due to the COVID situation on mainland China. So it appears to contradict somehow the report, which declared adamantly that China's attractiveness as a destination for investment is diminishing. What do you make of that?
Yes, I think it's interesting to look at these sort of juxtapositions when we're talking about data investment revenue. So what I would do is let's take us back to last year, or the last sort of 2 years. And again, China's handling of the COVID-19 pandemic broadly across businesses has been very, they have been satisfied with how they've done that. And that's given businesses confidence and resilience to double down on investments here in China. 2 years ago when the pandemic started, there was the questions around, will companies onshore, will they diversify their supply chains? Well, China was one of the only countries to get this into control very, very, very quickly. And that meant that business operations could return as normal, more or less. And again, because, China was almost, such a huge component of the global supply chain, that it was absolutely critical that operations could continue here. And that meant that, global supply chain can almost, I don't want to say continue as normal, but the contingency plans that were put in place really did work here. And that meant that businesses were going to invest further, and again, largely due to the market potential. Market potential was the biggest factor for further investment of UK businesses last year. And we saw more business, more revenue being generated. And we also saw more investment, or businesses being willing to invest further. So on that side of things, that was the positive. And again, what I would say is we are facing very short-term problems, but the long-term commitment of British businesses to the market, has been clear. We've seen businesses been here for the last 40, 50 years. We've seen investment increase. We've seen our bilateral relationship around, our bilateral financial relationship, improve year on year. So the long-term commitment to the market is clear. What we are seeing now is very, very short-term impacts, which are really causing supply chain and revenue disruptions for businesses right now. And the issue is uncertainty. We don't know when the next lockdown could come. We don't know how long it could last now with this Omicron variant. So that is making businesses pause on investment. We're not seeing businesses leave China, but we are saying that they are extremely concerned around, the next few months around revenue. We're also saying concerns around these supply chain issues. Just to mention, we have businesses which are saying that, it's not just the lockdowns now, it's the previous lockdowns, which are causing huge issues with our supply chain still. And so small little impacts here are causing global ripple effects. And so what does that happen when there's uncertainty? Pause on investment, pause on decisions.
Now, Stephen, tell us more about how committed our British businesses still are to the Chinese market, because you've mentioned that commitment has been and always been clear. And I wonder, with rising geopolitical tensions, tightening regulatory policy, and now stringent COVID restrictions, what will be the likely consequences for British businesses in China if the Chinese government simply brush aside your recommendations? And what will be the preferred alternative for British businesses who are still intent to break into and tap into the vast Asian market?
Well, that is our concern. Our concern is the fact that we are seeing issues around foreign talent. We're seeing issues around pausing on investment. we're seeing concerns that China is diminishing as an attractive market. So these issues generally must be addressed, because otherwise we are concerned about what the future may hold in regards to that. We've seen the long-term commitment of businesses to market, but these issues now are becoming right to the forefront. We're seeing these contingency plans of businesses that have been put in place for the last 2 years being pushed right to the limit. And that's also the same for the government contingency plans as well. They are also being pushed right to the limit. And again, when we talk about sort of foreign talent here within China, for personal and professional reasons, they are leaving, and it's becoming very, very problematic to replace them. So our general fear, general concern is that China is becoming a less attractive market to invest, to live, and to do business.
Now, you and I both know that you mentioned the attractiveness of Chinese market, and you and I both know that China's economy itself is grappling with uncertainty and risk due to its worst COVID outbreak in 2 years, with the epicenter in Shanghai right now. Now, the People's Bank of China have moved to further cut its reserve requirement ratio to help boost lending and shore up better small and micro local businesses. Are you frustrated, and are the British businesses frustrated that policy support and possible political protection for local companies could further dampen the confidence of British companies on top of the, in your word, unpredictability of COVID-related regulations?
Well, that is something absolutely that the British Chamber stands up and advocates, that foreign businesses are treated equally, specifically when we're talking about the situation that's happening now. We don't want to be, domestic businesses be preferential treatment, around staying open. So that's absolutely something that we call for more clarity on. And again, we would make sure that foreign businesses are treated equally on this instance.
Now let's look at the general state of the current state of the British businesses operating in China. 77% of multinational corporations expect their revenue to decline if restrictions continue, compared to 63% of SMEs and startups. But only half of MNCs reported decreased yearly revenues. That's fewer than SMEs and startups. Why were the multinationals less optimistic about operating in China? Is it due to the general business sentiment in China, treatment policy towards the multinational corporations?
Well, I think it's quite a nuanced picture. I would definitely not say that SMEs have had it easier or harder. They are struggling just as much. And again, when we talk about SMEs, it's extremely problematic when we're talking about cash flow and against just that backup of finances. If they have 3 or 4 months of not making revenue, they go out of business. And so again, we are seeing huge issues around SMEs. Now, when we talk about the MNCs, they have a bigger operation, they have a bigger footprint here in China. So again, they might be more shifted towards, for example, goods and manufacturing. So some of those will have operations that sit in Shanghai and the Yangtze Delta, which are, having huge disruptions when it comes to whether their factories being open, whether they can get truckers in and out to deliver materials. So the picture is slightly nuanced when we talk about the MNCs, but SMEs. But, one thing to mention is the SMEs are really hurting and really struggling. And it also depends on what sector. So, hospitality, tourism, that's been extremely dented. And again, the ups and the downs, the uncertainty for that sector has genuinely been damaging. And, we know some of our small businesses, some of our members, it's just become too tough. And the China market, and in that certain sector, they are actually moving out.
I see. Now, Stephen, from reading the report from the British Chamber of Commerce, I sense that most of the actually 99% of the concern was centered on the unpredictability of China's COVID policy. Now, in the report, the survey respondents said the, quote, prospect of prolonged and sporadic disruptions on business operations, people, logistics, and supply chains will have significant consequences for their businesses in China. But what I'm mindful here about is that the central government has always been very clear about it, isn't it? President Xi has said and keeps saying that it's of utmost importance to protect the health of the people. The national health National Health Commission has repeatedly vowed to stick to the dynamic zero policy. It seems like the reality is fixed and the policy path is clear, albeit a less ideal one. So if British companies are committed to the Chinese market, instead of calling on Beijing to change, why wasn't more measures taken to adapt to this new reality? Do you think it's time to redirect your time and energy to readjustment?
Well, I think, we know the dynamic zero COVID policy will continue, but what we ask for is more predictable and proportionate measures being applied to that. So when we talk about dynamic zero COVID, can the measures be dynamic with that? And again, it's learning from best practice. I think, we've been in this situation for two and a half years, close to 2.5 years. One thing I would mention is we actually did a very, very similar survey right at the outbreak of COVID-19 back in 2020. And so this was when there was truly an unknown situation. The situation then to now is worse. Now it is worse for businesses. It's worse for businesses, mainly because we've had that 2 years to understand the issues. So we're seeing issues around, business operations, issues around supply chain, issues around foreign talent. All of those issues have got worse since right at the start of the outbreak, where it was, it really wasn't known what was happening. So again, from our side, it goes back down to, can that dynamic policy be predictable and proportionate to the measures that we need?
Well, very quickly, what will be the actions taken by the British Chamber of Commerce in China if the situation continues to deteriorate?
So the British Chamber of Commerce, we will continue to advocate and support our members, support British businesses here in market. We will continue to be the voice of British business here in China. We will lobby and advocate and work with the Chinese authorities directly on some of these issues. We want to be moved out of this situation. We want this situation to be managed in the best possible way. So we will try to do our absolute best to work with the Chinese authorities, but we will continue to understand what businesses want, what businesses need, and try to support them through any means possible.
All right, Stephen Lynch, Managing Director of British Chamber of Commerce in China. Thank you very much for coming on Talk the Walk to share the BritCham's perspectives with us.
Thank you very much for the opportunity.